Hey everyone, welcome back to the channel. If you're new here, I'm your name. And today we're going to talk about something that could change your financial future. How to start investing with just $100 in 2025. Yes, you heard that right, only $100. You don't need thousands of dollars to get started in investing. If you've ever felt like investing is only for the rich, stick around, because today, we're breaking down how you can start your journey, no matter how small the amount. I'm going to walk you through why starting small is huge, where to put your first $100, and how to avoid getting overwhelmed by all the noise out there. Let's get started. Let's talk about why starting small is actually a big deal. It's the foundation of financial growth. You see, a lot of people get caught up thinking they need a ton of money to start investing. But honestly, the real secret sauce to building wealth over time isn't how much you dump in all at once, it's consistency, regular disciplined contributions. And the beautiful thing about consistency is that it lets you take advantage of this little thing called compounding. This is where your money starts making money and then money makes even more money. It's a powerful cycle, it's like a snowball effect, starting small but growing larger and larger. Think about it. Let's say you take that $100 and you put it into something that earns a 7% annual return. Now 7% might not sound like much, but over time it adds up fast. The magic of compounding accelerates your growth. In 10 years, that $100 with the magic of compounding could turn into $200. Now imagine if you were disciplined and contributed just $100 every single month. That's $1,200 a year. A manageable amount for many. Over 10 years with that same 7% return, you'd be looking at over $17,000. And in 20 years, you'd be sitting on close to $50,000. That's the power of time and consistency. The key takeaway here is this. You don't need a lot of money to start investing. What you need is a plan, a clear strategy, the discipline to stick with it even when it seems slow, and the understanding that even small amounts invested consistently can grow into something significant over time. Patience is key. So don't let anyone tell you that you need to be rich to start investing. Start small, stay consistent, and let compounding do its thing. Watch your wealth grow over time. Okay, before you go throwing that $100 into the first shiny investment you see, let's take a step back and talk about something super important: setting financial goals. Having a clear understanding of why you're investing is going to be your guiding star. It's what's going to keep you motivated and on track when things get bumpy, because let's be real, the market can be a roller coaster sometimes. So, ask yourself this. What's my $100 dream? Am I saving up for a down payment on a house, trying to build a comfortable retirement nest egg? Or maybe I just want to grow my money so I have more financial freedom. Are you looking for long-term growth? Then maybe stocks or ETFs are a good fit. Do you need your money to be more liquid and accessible in the short term? Then a high-yield savings account might be a better option. Once you have a clear understanding of your goals, you can start to develop a plan to achieve them. Don't get caught up in trying to time the market or chase the latest hot stock. By setting clear goals and staying disciplined, you'll be well on your way to achieving your financial dreams. Alright, now that we've got our goals sorted, let's talk about where you can actually put that $100 to work. It's important to know that even small amounts of money can grow significantly over time if placed in the right investment vehicles. And the good news is, you have more options than you might think. From traditional savings accounts to more modern investment platforms, there's something for everyone. First up, we've got high-yield savings accounts, also known as HYSAs. These accounts offer a higher interest rate compared to regular savings accounts, making them a great place to park your cash. These are a great option for beginners because they're low risk and easy to understand. You don't need to be a financial expert to get started with a HYSA. Basically, you're just parking your money in a savings account that earns a higher interest rate than traditional savings accounts. It's a simple yet effective way to make your money work for you. Now, it's not going to make you a millionaire overnight, but it's a safe and liquid way to earn a little something on your money while you're figuring out your next move. Plus, your funds are easily accessible if you need them. Some popular options include Ally Bank or Marcus by Goldman Sachs, but definitely shop around for the best rates. Different banks offer different perks, so it's worth doing a bit of research. Next, if you're feeling a little more adventurous and want the potential for higher returns, then ETFs or exchange-traded funds might be the way to go. These are a bit more complex but offer great growth potential. These are like baskets of stocks that track a specific index like the S&P 500. This means you're investing in a variety of companies all at once. What that means is, with just one investment, you're getting exposure to a bunch of different companies, which helps to spread out your risk. Diversification is key in investing. Some popular ETFs to start with include VOO or SPY, which track the performance of the biggest companies in the US. These are well regarded and have a history of solid performance. And the best part is, you can buy fractional shares of ETFs, which means you don't need to shell out thousands of dollars to buy a whole share. This makes investing more accessible to everyone. You can literally start investing in ETFs with just a few bucks. It's a great way to dip your toes into the world of investing without a huge financial commitment. Now, for those of you who are interested in individual companies but don't have thousands to drop on a single share of Amazon or Tesla, fractional shares are your new best friend. This allows you to own a piece of your favorite companies. Platforms like Robinhood, M1 Finance, and Fidelity let you buy slices of these big-name companies, making it super accessible to invest in companies you believe in. These platforms are user-friendly and perfect for beginners. Robo-advisors are also a great option. These digital platforms use algorithms to manage your investments, making it a hands-off approach. These automated platforms manage your portfolio for you based on your risk tolerance and financial goals. They take the guesswork out of investing and are ideal for those who prefer a more passive approach. The key takeaway here is that you have options, my friend. Whether you're risk-averse or a bit of a risk-taker, there's something out there for you. Do your research, figure out what aligns best with your goals and risk tolerance, and take that first step towards building your financial future. The journey of 1,000 miles begins with a single step, so start today. Alright, so you know what you want to invest in, but now you might be wondering, how do I actually make it happen? The process might seem daunting at first, but trust me, it's simpler than you think. Don't worry, we've got you covered. We're here to guide you every step of the way. Getting started is easier than you think. With just a few clicks, you can be on your way to making your first investment. First things first, you're going to need to pick a brokerage or investment app. This is your gateway to the world of investing. This is basically the platform you'll use to buy and sell your investments. Think of it as your personal investment hub. There are tons of options out there, but some of the most popular ones include Fidelity, Robinhood, and TD Ameritrade. Each has its own unique features and benefits. When choosing a platform, it's important to consider things like fees, account minimums, and the types of investments they offer. These factors can significantly impact your investment experience. Do your research, read reviews, and find one that feels right for you. It's crucial to feel comfortable and confident with your choice. Once you've chosen your platform, you'll need to open an account. This is your first official step into the world of investing. This is usually a pretty straightforward process that can be done entirely online. Most platforms make it as easy as possible. You'll likely need to provide some personal information like your social security number and bank account details to verify your identity. This is standard procedure to ensure security. Now for the exciting part, funding your account. This is where you start to see your investment journey take shape. Most platforms allow you to link your bank account or debit card to easily transfer funds. This makes the process seamless and quick. And remember, you're starting with just $100, so no need to break the bank here. It's all about getting your feet wet. With your account funded, you're ready to start investing. This is where the real fun begins. But hold on a second, don't go crazy buying up every stock you see. It's important to be strategic and thoughtful. Remember, we're all about starting slow and steady. This approach helps you learn and grow without unnecessary risks. Instead of trying to invest in everything all at once, pick one investment to start with. This focused approach can be more manageable. Maybe it's an ETF that tracks the S&P 500, or a fractional share of a company you're passionate about. Choose something that resonates with you. The goal here is to get comfortable with the process and learn the ropes without feeling overwhelmed. Take your time and enjoy the journey. Once you've made your first investment, congratulations, you're officially an investor. Welcome to the world of investing. Okay, before we wrap things up, let's talk about something that's super important but not always the most fun to think about: risk. Now, I'm not trying to scare you off, but it's crucial to understand that every investment comes with some level of risk. Even though the stock market has historically trended upwards over the long term, there are going to be bumps along the way. That's why it's so important to diversify your investments. This means not putting all your eggs in one basket. Instead of investing all your money in a single stock, spread it out across different asset classes like stocks, bonds, and even real estate if you're feeling fancy. Think of it like this. If you invest all your money in one company and that company goes belly up, you lose everything. But if you spread your investments across different companies, industries, and asset classes, the impact of one bad investment is minimized. ETFs are a great way to diversify because they give you exposure to a whole bunch of different companies with just one investment. Another important thing to remember is that investing is a long game. Don't panic sell if the market takes a dip. If you're feeling unsure about how much risk you're comfortable with, it's always a good idea to talk to a financial advisor. By diversifying your investments, staying informed, and taking a long-term perspective, you can minimize your risk and set yourself up for financial success. So, to recap, starting your investment journey with $100 is totally doable in 2025. Whether you're going with high-yield savings, ETFs, or fractional shares, the most important thing is to start. With the power of compounding, diversification, and a long-term perspective, your $100 can grow into something bigger over time. If you found this video helpful, make sure to hit that like button, subscribe to the channel, and don't forget to turn on notifications so you never miss another update on your financial journey. Thanks for watching, and I'll see you in the next one. Don't forget to check out my other videos on stock market basics and crypto investing.